Shall we start?
Good afternoon, sir. Good afternoon, everybody. Directorate General of Taxpayer Services has already been in the forefront in taking the important policy framework of the Government of India in taxation matters directly to the taxpayer doorsteps. In this regard, DGTS has been regularly conducting webinar on outreach program on various subjects that are of the immediate relevance, interest, or importance to the trade, importers, and exporters. Today's our main program is on proper understanding of the PMLA guidelines issued by the Director General of Audit, Cbic New Delhi, is being conducted along with the Director General of Audit, ADG Chennai Zonal Unit, in accordance with Tamil Nadu real estate agents and dealers in precious metals and stones. Sir, I am Dwarkanath Reddy, Assistant Director, DGTS Chennai, your moderator for the session. It is informed that the mic is muted and the camera disabled for all the participants other than the speakers in the session. Mic is muted to avoid any unintended audio interruptions so that the speaker is audible to all. And the cameras is disabled to avoid bandwidth related issues and to have an interruption free session. Now I request our Principal ADG DGTS Chennai, Nero Malik sir, to deliver the inaugural address, please.
Good afternoon, everyone. A very warm welcome to you. I hope I'm audible to all.
Yeah.
So today's outreach program is on specific sectors under the PMLA Act, and these guidelines have been issued by DG Audit, which has been made the nodal authority for PMLA regulations for real estate agents and dealers in precious stones. The Prevention of Money Laundering Act, PMLA, was promulgated with the intention to fight against the menace of legalizing the black money generated in the economy. So the act is very wide in scope and covers almost all sectors of the economy. But here we are not concerned with the remaining sectors. This is pertaining only to the real estate sector and real estate agents and dealers in precious stones. Therefore, it's a targeted audience, and they may kindly listen very carefully to the address and understand their compliance requirements and whatever their statutory and legal obligations are. Without further ado, I would request our prime speaker, Shri D. Dwarkanath Reddy, to take center stage and to enlighten the targeted audience. Thank you so much.
Thank you very much, sir. Thank you very much, sir. So now I request the Additional Director General Audit, Chennai Zone, ma'am, to deliver a few words about present session, please.
Shri Nero Malik sir, ADG Director General Taxpayer Services and Chennai Zonal Unit, and to everyone present here, good afternoon. I take this opportunity to welcome all the participants for this outreach program being conducted for real estate agents and dealers of precious stones. This outreach program is being organized under the aegis of the DG Audit, which has been appointed regulator under the Prevention of Money Laundering Act 2002. And under this act, real estate agents and dealers of precious stones are obligated to follow the anti-money laundering regulations to prevent money laundering and financing of terrorism. Being regulated, it was considered important to make these agents and dealers aware of their responsibilities under the PMLA. Therefore, these outreach programs are being organized by the Office of DG Audit. In this regard, I thank DGTS, ADG DGTS for having lent us support for organizing this program. Today, the faculty, Mr. Janaki Raman, IRS, AC retired, will be explaining the provisions of PMLA Act and the rules made thereunder. However, I would like to take this opportunity to briefly go through the duties and responsibilities of these dealers and agents. Under the PMLA Act and the Prevention of Money Laundering Maintenance of Record Rules 2005, agents and dealers are considered as reporting entities and intermediaries. As such, they have specific duties and responsibilities. Some of these responsibilities include carrying out customer due diligence, which means verifying the identity of clients and the purpose and intended nature of business. Further, maintenance of records is required to be done for a minimum period of 5 years from the date of transaction. As reporting obligation, suspicious transactions and cash transaction reports have to be furnished to the FIU. Also, the agents and dealers are required to appoint a principal officer in their office for ensuring compliance with the provisions of PMLA and to act as a liaison between the agency and the FIU. I would like to mention here that failure to comply with the provisions of PMLA can result in significant penalties, including fines and imprisonment. Hence, the role of these agents and dealers is extremely crucial in the fight against money laundering and terror financings. Hence, your cooperation in following PMLA is extremely important for maintaining the integrity of the real estate sector and the financial system as a whole. I hope that after this outreach program, you will have a very good understanding about your roles and responsibilities under the PMLA Act and rules. Thank you all for your patient hearing. Please carry forward the session.
Thank you very much, ma'am. Now I have taken up with Mr. Jayadam, sir. I'll give a little brief about sir, then sir will take a topic, sir. Sir, Jayadam sir is retired Assistant Commissioner Chennai. Sir has a rich experience in the department and he worked in DRI, ED, all this, and he got he is a presidential awardee. And he worked in Singapore, Malaysia, Hong Kong, several occasions, including the one before joining Enforcement Directorate. Even Enforcement Directorate, sir has booked a lot of cases and there's a lot of issues, and even abroad also. And sir was in nation Chennai, Bangalore, Mumbai, Calcutta, and every many topics. He has given lecture in Crime Branch CID, RBI Staff College, Indian Bank Staff Colleges. He is recipient of Finance Minister Certificate of Appreciation 1987, recipient of President of Republic Day Award 1990 for specially distinguished record of service. May now will come upon Mr. Jayadam sir to make the presentation, please.
Thank you very much. Good afternoon to IADG, Additional Director and participants. I feel it a pleasure as well as a pride to address you people. First of all, he has given an introduction about me. I have spent nearly 33 years in the department. I have served in 18 places and almost all sensitive organizations. I have been functioning mostly in the field of gathering intelligence and conducting investigation. And every organization I have been a handpicked officer. I only thank my sources and my subordinates who have been helping me in this endeavor. And since I am addressing a Coimbatore people of this gold trade, I distinctly remember 1976-77. We had a lot of gold cases, including one in Guru Lodge and so many other primary gold seizures. And we had contact with Govind and others. Still, I remember, even though more than 45 years had elapsed, I still remember those days. Now there is a transformation in the sense. Afterwards, I've been not only in excise, but we have been customs, then DRI, enforcement, as rightly said. Then we get a wide exposure of things. Now, since you are in charge of this gold dealer business and this real estate segment, what are all the things which is expected of you under PMLA? What are all the obligations cast on you? All those things I shall endeavor to give. And before that, I would like to say that this especially this money laundering has given me a wonderful opportunity. In the sense, I filed this money laundering information when I was working in DRI. At the time, this FERA was enforced, not even a FEMA or PMLA, which has come into existence at a later point of time. Even at that point of time, whatever intelligence we gave touched upon the money laundering done by, sorry to say, but you should not take it offensive, the gold dealers, in the sense who got a network of gold and diamond established throughout the world. That is the place where the black money is generated. That is the reason for the government to identify these two agencies for concentration. And in fact, whatever cases I have detected, the money laundering, the money has gone, laundered funds in the sense, I will tell you what is laundering other things. So you will better understand what situation you are there. Then Today's topic is not only important, but it's also interesting. It concerns you, me, everybody in this. And what these money launderers do, they subvert the rule of law and they make the law unto themselves. And why they are doing this is that there is a lure for money. And this lure for money is detriment to the rule of law. So if you just analyze the spelling of lure and rule, only the words, only the letters interchange. Lure and rule, you just see the same letters. So that's why the law is also twisted to their convenience. And what these money launderers do, they indulge in evasion or smuggling or drug trafficking or other nefarious activities, and they take the funds away and place it at a place beyond the reach of law. That is called the parking of the funds beyond the reach of law. And afterwards, when they need it, they can get it rerouted through some other transactions. Interestingly, today's lecture being one we are addressing to gold trade and real estate trade. It is of significance to mention here that the extent of gold imported into our country is per annum 800 metric tons. You can imagine to what extent jewelry business is going on because of our population, where people always long for gold possessions. Then coming the precious stones, today's lecture also covers those in the precious stone industries. And you can always boast, you can even lift your collars up by saying that India is the world's largest processor of diamonds. 14 out of 15 diamonds are done in India, that is, and more especially in Gujarat and other places. And volume of diamond trade is of gargantuan proportion. And in a country like this, where we are not rich enough, we are not affluent enough, but we have a lot of gold dealers, lot of diamond merchants, lot of all these people. So government machinery is limited. That's the reason the government has adopted a risk-based approach in these matters. Then, as all these gold dealers and those in the real estate sector, they come under the reporting category. They have got to only report whenever they come across a suspicious transaction. So, in order to understand today's lecture in a nutshell, I would like to say what are all you should know. Now, regulator in respect of these two industries, they have appointed DG, a Director General of Audit, and two sectors are real estate agents and dealers in precious and semi-precious stones. And SRO is self-regulatory organization. You are all self-regulatory organization, and we work for the anti-money laundering. And we through our record keeping, we should be able to expose who is involved. Then report, and the next one is financial. If at all, if we come across any suspicious transactions, it is a duty of this gold dealers and those in the trade to report to Financial Intelligence Unit. And there is a report called suspicious transaction report. The more I will go through after this lecture on what is the important salient provisions of Pmla. Then cash transaction report is also important, where those gold dealers must be knowing that beyond 2 lakhs we won't be accepting cash also. And likewise, up to this as regards real estate also same thing. What is applicable to income tax? It's all applicable to everybody. Then there is a financial action task force is also there. Whatever information which has been disseminated, it goes to them for processing. Then why? The next one is what for this reporting requirement is there? The reporting requirement is for prevention of conversion of black money into white. Why this is applicable to jewelry houses? There are the common points in this country for letting in the unaccounted money into the system. Then why people lure for money is that it's a safe mode. It is safe mode for keeping and safe mode for conversion also. Whenever you need it also, you can get it at the market price, the money. That's the reason always the people going for investment in gold. And likewise, investment real estate also. I have done some politicians' case where they have got some money laundered, in the sense all money, corruption money. All this they don't want to keep in India. They sent it abroad. They sent it abroad through establishments of this gold establishments and diamond trading establishments, because they only have got the huge money from there. These Avala transactions. More I'll deal with the Pmla aspect, and from there it goes to a coded account. That's the reason from the base point, from gold dealers level and this real estate segment level, we should be able to identify whether there is a suspicious transaction is involved here or not. Then as regards the real estate also, all of you must be knowing that these people always undervalue the property because of registration department vagaries. There's one place where this lot of black money can be let in. in acquiring the property. Once you acquire the property, then at the time of selling also you will get the market price. So what I want to tell is the money is kept growing. Now, coming back to this PMLA, India is a signatory to World Conventions, the United Nations, and we are also member state. And this United Nations General Assembly, in the thing held on 1998, all the member states to place this anti-money laundering legislation into their legal system. That's the real obligation on our part to adhere to the UN Convention. Then later on, UN held a special convention of counterfeiting world drug problem. The world, in this context, even though the drug problem is not concerning you, some of the drug peddlers, whatever money it is got here, it is laundered in the sense through Hawala. I will explain about that Hawala transaction, how it takes place, how the money is laundered, how it is going to a particular account in a tax haven, and from there, how it is going for profitable investment in another country. And this was enforced in the 2002, countering world drug problem together to combat money laundering. UN held a special session, and it came, and this PMLA came into force from 2005. And it came as a result of a Palermo Convention. You need not have know, but still know. This Palermo Convention of 2000 provided for, it says, if the crime crosses border, if the laundered money enters some other country or some other from there goes somewhere, if the crime crosses the border, so also the enforcement also should take care of it. Then object of PMLA, this PMLA was passed in the year 2002, but it came into force from 1/7/2005 only. The objects of this PMLA is to prevent this money laundering, control of money laundering. Then the preventive measure is to confiscate the property involved in money laundering, and to deal with any other issue connected with the money laundering, to launch prosecution against the money launderers, and in order to attract the provisions of PMLA, the offence should come under these scheduled offences. There are 3 schedules there. I'll deal with the subject. In a nutshell, what I want the participants to understand is that the offence of money laundering is in terms of Section 3 of the Act, and this Section 3 has 2 parts. First is when one acquires the proceeds of crime, that is via the commission of predicate offence. And the second one is when this amount so acquired is laundered. These are the 2 processes in the money laundering. Then understanding money laundering, what is laundering of funds? Like you send your dirty clothes for getting it cleaned. You send this black money abroad or some other place in a disguised transaction and get it white. This is called the laundering process. Why funds are laundered is that you don't want to declare the same, or you want to keep it concealed, and you want to send it somewhere, or you wanted to place it beyond the reach of law. That is the reason the funds are being laundered. And where laundered, and previously when the Act was passed and subsequently also, one was under the impression that laundering of funds involves transaction in a foreign country. It is not necessarily so. If any ill-gotten money is related to any system or any other business establishment, that is also laundering. Now, the wider definition of money laundering has been given in terms of Section 3, so as to take cognizance of these matters. Then how laundered, where all, who are all in the ring, I'll explain to you. Financial, and what is the effect of this money laundering is total financial instability is caused, and it is used for terrorist funding also. And this processing of money laundering involves 3 processes, namely placement, layering, and integration. Then who are all evading? Now this important question we have come to. Who are all evading is, one is tax evaders, second is manufacturers, third is importers, 4 is exporters, 5 is the middleman, especially in big governmental deal, there are commission money is paid. But in fact, a lot of cases we have directed on these commission agents laundering the funds of politicians or other influential persons. Then 6th one is bankers. Nowadays, any avid reader of newspaper would come across 800 crores, 2000 crores case, and the rules are bent, and banks did not observe their due diligence method, resulting in flow of banking funds. And this money has gone abroad in an illicit manner. And this is bankers also. Then financial institutions are also involved in this. Corrupt officials, corrupt judiciary, politicians, drug barons. As regards drugs, the volume of money in circulation in the world is less than the volume of narcotic money. That is, to that extent, narcotic money is there worldwide and very difficult to trace also. And these enforcement agencies have been only catching the small people because their hands does not lead to a big man. Beyond the, I guess once you catch the carrier, they take the responsibility onto themselves, and the carriers are taken care of by the drug barons. That's the reason drug barons are settled in Dubai and other places. They're enjoying merrily. And where all these funds are laundered. And I will tell you some other countries. This is not exhaustive. You can take it as granted. These are all the places where the money is laundered, where the taxation laws are very simple and doesn't ask too many questions on the depositors of money. One is Switzerland, to Cayman Islands, British Virgin Islands, BVI. From London, one can go to this island, operate and get back without getting a stamping on his passport as having visited the particular island. Then Mauritius Island, and you would have known a lot of investments through Mauritius is coming to India. And if you have a deep penetration to that, you will stumble upon a politician or others who have laundered funds to Mauritius. Then Bahamas Island, Isle of Man, Belize, Panama Island, Netherlands, Canada, Sweden, these are all the tax havens. And then how this PMLA has come, it has not come all of a sudden. There are various forerunner acts because this PMLA, though was passed in the year 2002, it came into force from 1/7/2005. Before that, there were various other acts. And this PMLA, I would only say, is a mother of necessity because in all other acts, the law agencies are not able to lay their hands over the offenders in a more effective manner. That's the reason PMLA has been introduced. And before that PMLA, I will tell you what are all it is as necessitated on account of liberalization of economy and fear over the less effectivity of FEMA. Earlier, when FERA was there, whenever people get a summon from enforcement directorate, then the shivers will enter their blood, that there will be problem for them. But slowly, this as a result of liberalization of economy, FERA 1973 gave rise to FEMA 1999, where these offences were treated as civil offences with not rigorous imprisonment, other kind of thing was not there. That's the reason people are indulging this kind of money laundering with impunity. So that is the reason when FEMA was proved to be just not on par with the FERA, and in order to plug the loopholes in the economy, they thought it best to introduce this PMLA to combat the menace of money laundering and the prevention of conversion of black money into white. Then, more importantly, in many cases, one has to identify the money trail, where the money has gone, how he has acquired, proceeds of crime, how he has acquired, what is the crime committed, what is the predicate offense he has committed through which he has acquired, and what manner he has disguised the funds, in what manner he has laundered abroad and domestically also. Then we have to identify what are all the properties involved for confiscation. And ultimately, prosecution of money launderers are also there. Incidentally, I am saying today, after my 33 years of service in law practice, I am also a president of a Nidhi company, which is giving mortgage and jewel loan. Still, sitting in this seat, I cannot do intelligence. But I have a strong feeling that a lot of these Nidhi companies, instead of taking a gold jewelry on loan, instead of extending gold loan, they have been simply creating records to siphon funds. One classic case now in progress is regarding Melapur Nidhi, where I am also one of the depository. You may think how foolish I am, but sometimes it happens to people like us who are more vigilant also. Then take it in a small measure, but how these kind of things are taking place in gold trade. Then most common forms of money laundering is one is Hawala system. In this connection, I am proud to say that I have tracked many accounts where the money has been laundered through this Hawala system. Suppose I illustrate, because this is a common term everybody uses. I tell you, if a politician, say your state or ex-state, he is corrupt, he gets money in so many ways, by twisting the law or bribe money or consideration for thing, or some arranging some imports into India for sale through state trading corporation, they get a commission. And some of those money which has been laundered per month in any state, any small state, the money so accumulated would be to the tune of more than 100 crores minimum per month. And this fund, this money, hard cash they are having, but they cannot take it. They cannot take it. And what they do, they catch hold of persons. Here only your industry comes into the picture. They catch hold of person. The persons whom they are catching are those who are having gold and diamond. As I told you at the beginning, the amount of gold imported to India is 800 metric tons. The diamond trade, we are the biggest one. We are the largest. 14 out of 15 transactions of diamond are attributable to India. And so foreign establishments, I don't want to mention the name. You must be knowing. If I mention, then it will be giving a prejudicial picture to others. There are various establishments who have got branches in places like Malaysia, Singapore, Hong Kong, Denmark, Sweden, Mauritius. So whatever they do, they are showing as if they are in the gold or diamond trade. But most of the money they get it is through this kind of money. What they do is that, suppose a corrupt man here wants to send 100 crores to a forwarded account in Switzerland, he will contact the person in Bangkok, Hong Kong, or Singapore, and through his establishment, it will go to a quoted account. And the person who is sending the money, he has to get back this 100 crores, isn't it? He will be getting 104 crores. The 104 crores will be delivered to him in India, which he will use it for buying gold. Now you will understand how you are coming into the picture. Suppose if a politician or a corrupt official or a banker or others or establishment wants to stash 100 crores from India, it may be a banking fund or a ill-gotten fund. So only thing, he should have a contact person abroad. Once he contacts the person, then they will strike the deal. Then they say this 100 crores has to be sent to these 3, 4, 5 accounts in Switzerland and other places. They give the account number. Then the person who gets the instruction, he says the money has to be delivered in India. So what is the price involved in this laundering is that for 100 crores to be stashed abroad, 104 crores money he has to give in India. And there were two-way commission is also involved. They take 4% here and 4% laundering also. That's the reason these Hawala operators are thriving. On single transaction, they get crores and crores of money. This is the Hawala system. This is what has been done by most of the politicians, corrupt bureaucrats here. Then other one is physical smuggling of gold, which people must be aware of. A lot of gold seizures are taking place, not only in Chennai, Bombay, and other places. Recent Chennai says 240 kgs of gold, how through a hub it has found place. All the daily, if you look at the paper, a lot of gold seizures are reported. Sometimes people carry the gold in the rectum also while coming into India, and these kind of things are taking place. These are physical smuggling of gold is also there through this baggage or through consignments by concealment and other process. Then the next way of laundering is fictitious loan. This is also one of the gold dealer Chennai was caught in the sense he has shown a lot of fictitious loan. In the sense he has shown a lot of fictitious transactions under various bill of entry. No goods have come. Only he has fabricated the bill of entry, and that bill of entry he has to send in remittances. Whatever funds laundered here, he uses the bank to remit the funds, and he will be remitting the Indian currency to the bank as if they are the proceeds of his transaction. In this manner also it is going on. NAC Jewelers case is a classic example. I just want the audience to look through your Google and see about Antapatmanam and other matters. This is all evident, but only thing we have to put in place proper checks and balances to ensure that this is not happening. The other one is illicit fund routing. This illicit fund routing is taking place through shell companies, foundations, real estate. Here also, real estate is the biggest sector in black money. But for that reason, we cannot condemn them because our population is more. We want housing needs also, but one person cannot remain pure. These are all part and parcel of our system. But only thing, to the extent possible and feasible, we should put into practice whatever controls which the government expects this industry to follow. Then a lot of fictitious transactions have been entered into as if they are sometimes they export the junk item, but they will get the money from foreign country. While getting the foreign country, whatever laundered funds they are coming back, and while exporting, they export the junk and they take a drawback and other things. So all these schemes are misused by unscrupulous people and facilitate money laundering. Then what is the ill effect of money laundering? You should know. One is this affecting the security of the nation and independence of the nation, and it is creating law and order problem, paving way for corruption and commission of crimes, and buying silence from the witnesses also. This we have actually seen in respect of narcotics cases when we have produced the witnesses during prosecution. Then the witnesses came to the box, but they did not tell what has happened, but they were telling other thing. When we asked, they used to tell, sir, you can only give protection here, not outside, like that. Sometimes buying the silence of witnesses also, they use these laundered funds. Then collapse of capital market. So we have got a sound capital market. A sudden collapse can be, the Hindenburg report and other thing, they are in the paper. You are reading about this Adani matter and other thing. The capital market collapse, how it can take place, how by carefree allowing of funds to come into India and any transaction unchecked, it may lead to such a situation. And the worst aspect of this is sometimes it is used for terrorist financing. Some of the funds they deliberately keep in India to finance the terrorist acts. The classic example is Bombay blast and other things. Day in, day out, we are seeing. All these are local money has to be used. So this kind of money is being used. Only thing, the ability of the investigator is to find out who is the person who is indulging in prejudicial activities. And the expectation from the gold trade and the real estate trade to identify. You people may have a doubt. Sir, suppose if I mention the name of the person who has been bringing cash, you may not be able to do because you are only an employee. Even the proprietor for that matter, you would only be interested in promoting his business. These are all the setbacks. See, they have put a cap of 2 lakhs. Suppose if 5% come get to 2 lakhs, you are obligated to accept. Only thing, if it is digitized, and PAN number is asked, then the problem will be solved. Otherwise, you people can throw me about 100 questions. It will be of same nature. So how to identify? You may not be able to identify. You are not an investigator also. But only thing, prudence is required. So suppose if a person comes and physically you are seeing that is, then you have to report. Unfortunately, you have to report, even though it may affect your business. But otherwise, you will land yourself in trouble. You will be the 3 years to 7 years imprisonment is there. If you don't adhere to this, whatever regulations. Then next one is this Pmla Act has not come all of a sudden. The Income Tax Act was there, Early Gold Control Act was there, Customs Act provision, FERA, FEMA, Copy Posa, FERMOFA, Benami Transaction Act. All these things, with all these things, desired objective could not be achieved. As a very effective measure, they have brought in Pmla so that they have to identify the proceeds of crime, who has laundered the crime, put everything, whatever property has acquired during the relevant period, it will be attached through a provisional attachment. And once it is attached, it's very difficult to get back, as the onus of proof is on the person whose property is attached. Then having understood what is prevention of money laundering, having attended this lecture, you should know the important provisions are not too many provisions. It's a very small and compact act. Important section is section 3, which deals with money laundering, and section 4 is punishment for money laundering, and section 5 attachment. All 3 important sections: 3 money laundering, 4 punishment for money laundering, 5 attachment of property involved money laundering. Then all these things, it has to undergo a process of adjudication, that is under section 8. Then these enforcement officers have got a power of survey is there, that is under 16. Then there are many places they have been conducting searches. The searches are conducted in terms of section 17 of this Pmla Act. And even if you have a suspicion about a person also, suppose you are the gold trade and you are carrying huge currency, you can be intercepted. If a person is, it is in terms of section 18 of Pmla, then if a person is indulging in prejudicial activities of money laundering, or aiding in money laundering, or abetting in money laundering, or entering into any fictitious transaction, he could be arrested in terms of provisions of section 19 of Pmla. Then once you seize the property also, the retention of property is with the government. That is section 20 provides for that. And this, whenever you seize the record also, the department can retain the records for 6 months. If for more period is to be retained, then one has to seek a permission. Then there are certain records, because some cases money would have been laundered, but you can stumble upon some documents. The documents may evidence more than 1,000 crores of transaction has taken place. That is called the tracing the money trail. So the tracing of money trail, suppose if you catch such kind of documents, and if you take some corroboratory evidence and some foreign evidence also about this money laundering, it has gone into a particular bank account or thing, then these documents serve as valid evidence, as presumption as to certain documents, that is dealt in section 22. Then I enter into a transaction through I earn money. The money transaction is I commit a predicate offense and earn this money transaction. After earning this money, I want to conceal this money as a white money. So I enter into 2-3 legitimate transactions. So illegitimate proceeds finds its way into legitimate transactions. So in those cases also, they are called under Pmla interconnected transactions, and they are also liable. Whoever has indulged in interconnected transaction without even knowledge, without having any knowledge that what he has received is laundered funds, still the property is actionable at his hands. Still the authorities are empowered to provisionally attach those properties and confiscate the thing. So in all these cases, the burden of proof is on the offender, that is in terms of section 25. On section 20, appellate tribunal, I'm not, all other things regarding attachment seizure, it may not be of relevance to you. So I am skipping, even though if you come for regular officers who have been taking what are all the salient provisions which they are duty bound to observe all those things. So I am, for the time being, I go back to schedule offences. Having attended a Pmla lecture, you should know that it only takes cognizance of schedule offences. These schedule offences are given schedule A, B, and C. In order to attract the provisions of PMLA, the offence must come under this, whenever the offences mentioned in the schedule offence. And these schedule offences may relate to several acts. And these are called the offence committed under particular act is a predicate offence. Then schedule to PMLA has 3 schedules, Part A, Part B, and Part C. Part A contains more heinous crimes like IPC offences, NDP, narcotics, drugs, and psychotropic substances offences, Anti-Keys and Russia Act, then Copyright Act, Trademark Act, Wildlife Protection Act. All these are coming, and Information Technology Act. They have been included in Schedule A. Schedule B is that part offences, Part A offences, where the amount involved is more than ₹1 crore, then they come under Schedule B. And Part B. And Part C is more heinous in the sense trans-border offences. It crosses the border, crosses Indian border. Funds are laundered to foreign country. Then in those cases come under Part C. So accordingly, the offences are categorized. Then 3 stages in commission of offences. First, a person receives the ill-gotten money. The ill-gotten money, first he has to make it a small loss. That is called, first he has to decide where it has to be placed. That is called the placement. Then the money so received is layered into several small pieces so as to escape detection. That is called the layering. Then it is let into the system, and ultimately it goes abroad. That is called the integration. These 3 processes are involved. And the section 3 is the most important section, as I already told you. It only lays down the conditions to charge a person involved in the money laundering. It aims to punish the individual who is directly, not only directly, but also indirectly, and knowingly assisting or party connected with such act of concealment of this your ill-gotten money, possession in any other manner through gold acquisition or real estate acquisition, or showing by entering the legitimate transaction at a later point of time to show as if it is legitimate. Even those transactions are covered. That is called the projection. Projection or claiming the property as untainted. These are all coming under this category of money laundering. Then this amendment to PMLA has been made. Important amendment has been made in 2019. Recently also you would have read in paper about this sand mining, other thing. What they have said is that it has made it clear in Madanlal Chowdhury's case, no action may be brought under PMLA where a person is absolved of scheduled offences. Suppose if a person is absolved, if he is acquitted in a scheduled offence, then it cannot be proceeded against under PMLA unless money laundering itself is an offence. And independent of that, the scheduled offence, there is a money laundering you should prove. Next one, anti-money laundering. Government has devised so many measures. One that earlier on the time when PMLA was introduced, it only took cognizance of main issues such as corruption, drug money, immoral trafficking, then gun running, support to militant organizations. Slowly, the various other offences under IPC, copyrights, mines and minerals, various other things got copyrights. So many things have been added. Nowadays, you can say the list is very wide. If anybody indulges in any violation of law, which is a scheduled offence, then whatever money he has earned, it is liable. And whatever money he has transferred to other, it is liable. Whatever money he has put into use in showing some legitimate transaction, in acquisition of gold, or that is also liable to attachment. And the intention is to conceal. That is the intention of the party is involved. Then activities generate money flows involving diversion of resources of the country. That's the reason India is worried like any other nation. And these diversions can have a negative impact on your money value may go down further when so much of money has been let into the system as a parallel economy. Then your stock market will collapse. Then this PMLA Act, it covers so many other persons. But the recent addition 2002 is that you people, that is gold dealers and real estate sector, have been brought in because government is convinced of the fact that these people wittingly, willingly or unwillingly, they become parties. And the government has been very active in introducing measures such as compulsory hallmarking, which was introduced in the year 2007, then imposition of GST and this excise duty on jewelry. Then all these things that did not yield the desired results. That the reason has made the government to introduce this PMLA. Then one grouse of the government is that because you are also part of this, we are all Indians. The government has a legitimate grouse that even though the diamond trade is well equipped and well represented at the ministry level, nothing. Still, the trade receives jewels from government on account of trade not calling it exposing those behind the scams. I do not know how you people will come out to expose a fraud done by the other jeweler, unless you have some intimate knowledge about that. When you yourself indulge, then you will be if you are lucky, you will survive. But if you don't maintain your accounts, you will get caught. Sometimes unwittingly, without exercising proper supervision, if your staff has been receiving money in various names and selling gold or selling real estate also, you will be inviting trouble by not putting a proper system in the place. Then who are all the persons targeted by PLA is real estate agents and this where the due diligence measures, enhanced due diligence measures have been called for. Then cash transaction report, it has to be reported. And whenever any person is coming with huge cash and wants to make payment in various ways, make various drafts of smaller denominational thing, you should be suspicious about the person, because even though it may improve your business, the longer run, if the transaction is exposed, your business will come to a standstill. Whatever legitimately earned assets would also be attached. In that manner, you run the risk. And sometimes also non-financial business professions also, like chartered accountants and others, they have also been covered. Only thing, this Director General of Audit is concentrating only on this gold dealer and this real estate sector to be very awakening in these matters. Then what this you should appoint any gold dealer here or this real estate agent for his establishment. You should appoint a principal officer, and this is rule 7 of PMLA rules, and he has to furnish relevant information. Periodically they have to send this information. This information is in terms of rule 8 of PMLA on monthly basis, and this has to be sent before the 15th day of the succeeding month. And the format has been prescribed by the Director, Financial Intelligence Unit, Government of India. In that format has to go. And you have to identify, because of this only, one has to identify the beneficial owners. Suppose if X and Y bring a lot of cash, then you should identify the beneficial owner. Theoretically, what I say may be okay, but you may find it difficult. These are all the gray areas. How of your own will go on report? How of your own form of presumption? These are all the biggest question marks, which has to be tackled by the enforcement agencies and lawmakers. We are not competent. We are only interpreting law as it is. What is your requirement? But whether it is can be complied with or not is fraught with a lot of practical difficulties. I leave this to you, because I don't want to enter into controversy. Because being a government servant, I cannot enter into controversy. This is what the government expects of you, and we should adhere to it. Then authorities for implementing is all these PMLAs, financial task force. Then why these are these weapons of mass destruction also these are. So that act provisions have also been taken into account in insisting this kind of procedure. Then combating proliferation of financing. Then there is a regulators are appointed. Then Director General of Audit is appointed as the regulator on behalf of Central Board of Indirect Taxes. And DGA has been appointed as a nodal office. That's the reason he has been trying to convene this kind of a meeting to tell more to the participants about the provisions of PMLA, where they stand, what is their obligation. That I am duty bound to take what all they are bound to observe. Now these people are bound to observe this unlawful activities prevention act provisions that meticulously follow, and and whatever transactions we do, whether it is going to support a terrorism, a person who is offering money, if he is a notified character or he is in a prejudicial activity, he has come for any adverse notice, then one has to promptly report to Financial Task Force, and it will go a long way in suppressing the terrorism. Then the various anti-laundering guidelines have been given, anti-money laundering guidelines have been given. And the Financial Intelligence Unit is the apex agency in India, which has been giving this kind of thing. And whatever they say concerning due diligence, it has to be followed. Otherwise, at the field level, the gold dealers and real estate agents may come to grief. In the sense, any unwittingly they have entered into some kind of transaction by receiving cash or some through various drafts from a person who is of suspicious character. Then whatever legitimate business he has done, still he will be put under prison since he has not cared to report. So what is important is reporting is the most important thing. So the role of a SRO is that they should explain that they should also recommend best trade practice. Here also there's a question mark. As in some lecture I am giving, but this is, can be put into practice by the best trade practices. At your level, you can insist. Suppose you insist too much, then you will go to the next shop. This is the practical difficulty you may have. It is for you to approach the government to introduce various other measures also, so that honest people are not suffering, that kind of thing. Then we have to play proactive roles also. And these measures have been brought in by the government so as to reduce the policing effect. Then the expectation of the government is that ultimately what the government wants is there should be a system, there should be a procedure, there should be a due diligence. This has to be actively followed, and the trade is run efficiently, honestly, with the best trade practices acceptable. That is the ultimate aim of the government, and that is the reason they have placed a lot of trust on the industry. Okay, I give you a free liberty. You conduct your transaction. Whomsoever you want to sell, sell. Now, okay. See, all these stipulations to this gold dealers and real estate are in terms of section 12 of Pmla. And I was telling about a case where a guy knocked at my door during midnight and said, sir, about crores and crores of money has been laundered through diamond transactions. Then I said, okay, let him tell. Then he said, sir, I said, I won't act on oral thing. I want documents, like your cricket catches win matches. I said only documents because I've come across, I've filed cases involving big politicians, other thing. Only thing based on the documents, only I have been filing intelligence. So I asked her, you are telling orally, but what is the proof? Then he has brought, I still have that thing. He has brought a file containing a lot of shipping bills, around 100 to 200 shipping bills, and says, all these diamonds are going, sir, and it's going on a shipping bill. And after this goes, the person, the establishment person takes the flight the same day, goes to the destination, collects this diamond at 600, brings it in a kerchief valued about 60 lakhs, and he passes through Bombay airport, and he won't be carrying any other baggage or any other slip in his possession, and he will be moving. Suppose if he is caught, he will be having $500 in his hand. Whether police person touches him or customs touches him, he will give. And he has been successful all these years. Then I said, it is like a story you are telling, but with this I cannot be filing intelligence incurring the wrath of people. It may be good for a story or a cinema story, but what is the proof? The proof is said, sir, this file you see, go through the document, tabulate it. Then you will find various dates on which this gold export had taken place through documents, through air cargo complex. Then money can, on the same day, I'll show you the passport entry, the carrier's passport entry. On the same day, he has taken a flight to that destination. Then very next day, he is returning. He said, this guy is languishing in a Burma jail. And the person for whom he has done this kind of activity, nobody was trying to help him. That's the reason he wanted to expose. I could not. I'm only telling you, there are certain things, there are certain limitations. So sometimes some information are getting worked up. If the time of the person is bad, then you will get into problem. If the time of the person is good, then he may not get into problem. Likewise, you also are telling the worst in gold trade or real estate. Sometimes even though unwittingly, without knowing, you would have received cash, and you would be risking or by not reporting or some kind of omission. And sometimes lot of unaccounted transactions are going, still persons are not caught. This one can always test in it's a fate. Beyond that, we cannot answer this, sir. And what is the stipulation in this Pmla is that all the transactions record its value, and all the transaction comprise a single transaction or a multiple transaction each other. On any transaction taking place within a month which you suspect of a fictitious ledger, you are under obligation to report and furnish information of the transactions to the director within 50, that is within monthly return, at least you should tell. Or when these are happening, it is enough if you tell within 48 hours or so. And the record to maintain, you are required to maintain records evidencing identity of clients. This is important, especially when you enter the high value transactions on the same day from multiple persons giving the same address. Then it is for you to identify the client and beneficial, who is doing this through whom. That also you should have knowledge, you should intimate. It may look better, it may look very difficult for you to complain, but these are all the stipulations. And maybe if I take a lecture physically, you may be raising umpteen number of questions touching upon that aspect. How it is possible, sir? How to suspect? Even officers are not suspecting. How do you expect the trade to suspect? These are the only thing. On your part, maintain the records. On your part, don't indulge in cash, that is receiving cash without accounts. That kind of thing you don't indulge in. And incidentally, I just wanted to tell, at the end of the day, I'll tell there's a Hyderabad case reported where Musadia jewelers, where huge amount of currency has been seized and where the gold has been taken by the directors themselves. I'll tell you those cases also. And penal action for non-compliance, this also you should know. What is the catch behind these things? Law expects you to maintain, law expects you to report, law expects you to send returns. If you don't do, what will happen? Then they will be awarded 3 to 7 years imprisonment. You people should know. Any negligence or inaction on your part, even without intention, then you will invite trouble if you are caught. If you are caught, I keep it lost. If you are caught. but I don't want you to do things without getting caught. But that's your fate. But only thing, you always maintain yourself in an ideal situation, because government has reposed a lot of trust on you, and always maintain what is the requirement of law. You comply with the law, or else you will be facing this 3.7, 3 to 7 years imprisonment also, and whatever gold in your possession would also be confiscated. This thing. Now, having now the concluding part of the lecture, I will only want to tell what you should do and what you should not do. In the case of a sale of a gold or silver or diamond, if a same person comes and makes payment over 10 lakhs in different manner through different persons, then you cast your suspicious eyes on him. The seller should preserve the document, or how many you have to preserve this document for communication to enforcement directorate. The name and other details of persons purchasing the ornaments with cash, it has to be registered. And if gold or cash is seized on account of keeping without proper documents, the same would be attached by government. You should know that if you keep cash without accounting, or if you keep gold without accounting, then they are liable for seizure. And the jewelers and staff members failing to provide documents, they are liable to 3 years to 7 years imprisonment. It may happen in some cases also. Even though, to my knowledge, no such case has been reported. Maybe that they have not identified. That could be the reason. But a lot of transactions are taking place. Then know your customer. That always KYC now. Even if you go to bank account opening, also they say, and you are entering into high value transactions. So you should also know the KYC is mandatory, and you should know, and you should also insist. Then clarification. Government has also issued a clarification notification that if it is less than 2 lakhs, there is no need for maintaining. So, but only thing, if a same person through his own group gives you money, then you should have a serious risk. Now, lastly, I just want to add some of what are the cases deducted by this government for a period of years. Since most of the people are from Coimbatore, you must be aware of a case against Lavanya Gold Jewels India Limited, and it is around 35 crores or so. Then Pranav Jewellers and Jewelry, and this is a Kanish Gold, that is also gold dealer, and they have been taking huge deposits of money, and whatever money deposited with them, it has been laundered abroad, and it has got to several accounts. This is also one of the cases deducted. And Nirav Modi case, everybody must be aware, where more than 10,000 crores. If you take into account, this is what our fraud committed at Bank of Baroda, this is Punjab National Bank. Still, we are not able to get him because the process of law is very slow. The person who has laundered the funds, he knows about the system and the vagaries of our legal system that cannot immediately act. And on another case is what I was telling about whatever your stock which you are holding, as a result of entering into some other transactions of this nature, you may lose. A classic example is Musadilal's case in Hyderabad, where if you go through it, you will find out even whatever stocks they had, a legitimate stock also stood attached. So that is the highest risk. There's a Damocles sword is hanging on the gold dealers. They have to keep the transaction in such a manner that no accusing finger can be pointed out to them. Then another case of similar nature is Iceworthy Realty, LLP and others. And as regards real estate sector, you must be aware of this Diwan housing matter, then Unitech matter. These are all some of the cases. Then as regards Chennai also, your own president of association, NAC Jewelers case is classic example of how this this also one night, one of my own departmental officer came and said, by the time I was a consultant, even though I am a consultant, I have not been taking up this kind of cases. He said, there's an enforcement problem. I asked, what is the enforcement problem? He said, these are all the persons. The persons don't want to come and expose themselves. Then I asked, what has happened? He said there are 9 persons are involved. Okay, what is that they have done? No, sir, they have got bill of entry. I find out the answer. They say they have got the bill of entry. But subsequently it turned out, because I made available this information to somebody for acting up. And even though they filed the bill of entry, they have shown as if they have imported goods and bill of entry, and they have used that money for laundering funds without receiving any goods. Funds have been laundered. Even some of the gold dealers whose cases I mentioned, they have adopted this way of filing bogus bill of entry, funds have been sent to tax havens. Then another case of similar nature is Atlas jewelry. These are some of the cases. If you look at it, you are maybe people in Coimbatore, at least 1 or 2 cases I have told. Just see the Google, see by yourself what is possible. Sometimes at the workers level may not be possible. The person billing the transaction he may not be able to do. But in the longer run, suppose if huge money is coming. Recently, I was telling about this Mylapur case also. In fact, I said I am a retired person. Still, I will help the association in drafting a complaint, sending it to Chief Minister and Finance Minister. What they have done, he has taken more than 500 crores by way of deposits. On this, the depositors were assured of 10% to 11% interest. But these persons were under the impression that they have been getting all these years. But what they have done is, after the flow of money into the establishment has stopped, they have chosen to draw the money through fictitious transactions. And I got those documents also where they have simply taken 50 lakhs, 1 crore like that without any gold there. That's the day before I was at the EOW office also. They are from bogus transactions they have shown. And some of the Nidhi companies also, I am sure that they are not indulging in legitimate transaction gold jewelry. They have been getting the funds and they have been siphoning the funds through some other transactions, Bitcoin, nothing, and paying the investors minimum amount. That's what is taking place in the country. We have to be vigilant. Now, as regards the real estate and jewelry sector, I need not have to tell. Because of Pmla, we want you to, even I was telling you, when I directed a case against politicians, some not politician also, the laundered money, they got hold of establishments at Hong Kong, Singapore, Malaysia. And through their establishments, they have taken money into code and money was deposited. Equivalent amount of money was paid through Chennai. Here also gold jeweler was involved. That was I don't want to mention the name. But what I want to put you into a general caution is that you should be very alert in recording the transaction. And whenever you have a suspicion, kindly intimate. Even though you may not be doing. Suppose if you ask me a question, how many people have reported, I may have to get a sorry figure. First one is, I am no longer in enforcement. I am an advocate now. Second one is, I do not have the details. But even the reported cases I see, I don't see any cases. But that does not give you liberty. There no case has been detected. That's not the case. Because you may be employee, your employer would have done it. There may not be any stock in your company. Even though you claim so much of money, you would have boasted your stock details, but corresponding stock may not be there. It has already been sold for cash, and the cash would have been laundered. So entire transaction would get affected. So is the case with the real estate agent also. So we've got to be careful enough. Next time when we meet, we'll come with various cases. But next time, let there be an interactive session also, where I prepare myself to whatever questions. I'll be happy if you put some questions to Director General of Audit for a thing. We'll try to clarify to the extent possible on person. Thank you very much. Thank you for your passionate hearing.
Sir, thank you very much for a wonderful speech and presentation, but it is a very short time, which was not given a long lecture. However, I got a lot of clarity on this subject, which we have a physical question, then we'll have a lot of doubts to be cleared, sir. Next session we'll have, sir. Thank you very much. And I thank Madam for organizing this meeting, webinar on online program. If you have a physical program is better, sir, I feel. I will request Mr. Mohan AC sir to give a vote of thanks to everyone.
Good afternoon, everybody. Respected senior officers of the department, members of the trade, our officers of our own department, ladies and gentlemen, I am sincerely thankful to Principal ADG DGTPS Chennai and ADG DG Audit Chennai for having taken time to give the welcome address and inaugural speech today amongst their busy schedule. Jarigaraman, a decorated and distinguished officer of our department, for having taken time and making this wonderful presentation to the members of the trade and officers of our department. I am also thankful to the taxpayers without whom this webinar would not have been a big success. The members of the trade who have come today and attended this webinar. I also thank Commissioner GST Audit Administrator Coimbatore and also the staff of Coimbatore Audit